Okay, so what's up? So today we are going to look at a strategy, but before we look at the strategy, let's go through some notes. So the strategy is all about the RSI, using the RSI and the Bollinger Bands. So basically, the time frames that we'll be using in this video today will be mostly we'll be using the 4 hour and the 30 minutes, where we'll use the 4 hour with where the RSI will set the RSI on the 4 hour time frame. Our RSI will be on the 4 hour time frames. Then on the RSI we will customize it to have only the 50%, contrary to the popular method that traders use for the oversold and the for the oversold region and the oversold and overbought region, where the overbought is usually perceived to be if price goes above the 70 level mark, while the oversold region is when the price goes below the 30 mark. Yeah, but for our strategy today, what we will be looking at is the 50% mark, or rather the 50 mark on the RSI. If the price crosses above the 50 line mark, then we'll consider that the price is on a strong move to the upside. But if the price crosses below the 50 mark on the RSI, then we'll consider the price or the trend to be on a strong downward trend. And remember, all this, the RSI will be monitoring it from the 4 hour time frame only. Now, after we have determined that the RSI, or rather after we've determined whether the trend is on an upward push, a strong upward push, or a strong downward push, then we'll switch to the 30 minutes time frame, where we'll use the Bollinger Bands. Bollinger Bands mainly, they usually show the volatility, and also they usually show zones or places of support and resistance. If the price goes to the upper band, we'll expect some kind of reversal patterns. That's why we'll go to the Bollinger Bands and look at the candlestick formations and the patterns that form there. And if that is not enough, you can also go to the 1 hour time frame. Remember the indicator that I showed you earlier, the trend catcher indicator. We can use the trend catcher to confirm our hypothesis, or rather to confirm our sentiment or our judgment from the 4 hour, where it showed us which trend we are on. If the price was above 50, then we expect this trend to give us an upward move or an uptrend signal. If those two align and we find our candlestick formation, then we will be safe to say we have to enter the market. But don't forget that all these indicators are usually lagging. What do I mean? All these indicators, they usually have a lag, and are usually tend not to take note of what is moving the market. So, a note of caution: indicators are here to filter out information, so it's up to you to practice due diligence. Know what is moving the markets. Is it the US president tariffs that is moving the markets? Is there any geopolitical tension around the world that could influence the markets or the prices? So it's up to you to go do your due diligence, know what will be moving the markets today. Then you can apply this strategy with a clear picture at the back of your mind to use these indicators. You can pick up the information from these indicators. Simply, these indicators will just filter out the trend and good entry points. So with that done, let's get into the charts. So now we discussed on the strategy, but we did not now discuss on how we'll exit the market. So here I'll be using the 50 EMA, this blue line here. This is the 50 EMA, and also I forgot to mention that I also use the 200 EMA on the larger time frames, only to show a clear trend, such that if the price is above this 200 and the RSI signals that there is a upward push, that will be a good zone to look at for buying opportunities. And also, if the price, like this region here, is below, if the 50 and the 200 are above the price, or rather if the price is below the 200 and the 50, this is a good region to sell. So if we can take an example on this chart, this is a chart of Euro USD on the 4-hour time frame. So at the first glance, let's say the price was at this point here. Let's say the price was at this point here, where I've marked with the yellow. We have marked it with the yellow box. Let's say this was our price at the moment. What would you want to see? First of all, in the 4-hour, I would want to see this 200 EMA. It's above the price, in which you can see our price is below the 200 EMA. So this is a valid entry, and also you can spot at this region here, there was a crossover where the 50 moving average was coming below, or rather the 50 moving average was crossing below the 200 EMA. Yeah. So our first hypothesis on the chart, and you can see you can switch to the line chart. You can see it was making a series of lower lows, a series of lower lows. Series of lower lows. I hope you can see. It was making a series of lower lows, meaning the price was in a downtrend. But for us, we are going to assume that price was at this region here. So from this price action, you can see we have two lower lows, meaning the price was genuinely moving to the downward. And at this point here is when the crossover occurred. So what will you do? We'll go down to the RSI. We'll go down to the RSI and look for regions where the RSI came from below, crossing to the top. Yeah, so this is what you'll want to see. Then what you now do is go to the charts and look for potential area, good potential area that you think the price is going to sell. So one of the regions, if I can extend this RSI. So let us dissect or look, let's give a keen look on this RSI. So here, at this point here, you can see price came up at this point here. Then it crossed below. Yeah. So at this region here is when price came below. So we can mark this region here. Again, price came up then price came down. It came down below this 50 mark area, but it did not hold for that much. It then came up again, or rather it then crossed the 50 mark, and you can see at this point is when again it crossed to the downside. So we've marked our first place. We will want to look for a potential move here. Then this is another potential zone here. This vertical line here, this is a potential move. So let's go through the charts and try and see these opportunities. So let's move to the charts. Yeah, so these are our zones. This one and this zone. So if we can confirm with it, we can move to the 1 hour and confirm. We can use this trend catcher just to confirm our hypothesis, and you can see at this region here is when the sell side, or rather the sell signal occurred. So if we can move to the 30 minutes and see how we would have gotten our opportunities. So let me clear this box here. So at this region here is our point of interest. Here where I've marked with this yellow box. So we'll want to see the kind of candlestick formations or patterns. If you have a keen eye or you are good at spotting patterns, you can see something like a double top. Let me draw the double top for you. Where price pushed upwards, then came to this region here before pushing again to the upside, forming another top, and then moving to the downside. So this was a double top formation, if you can see it clearly. Or rather an M. It formed an M, meaning that price did reject this region, this price region here. Meaning that price rejected this region here. Yeah. Yeah, so there was some kind of resistance at this region here, where price it came the first time tested, formed a high, then came down, then formed another equal high. Then what you would expect is price to move to this downside. So with that done, we can see we had a double top, and this is our neckline. This would have been our neckline here, where price broke successfully. So what would you have done? Here you would have entered a trade with a 30. Let's see, you would have entered a trade here. If the distance from your entry point to the high of this double top would have been more than 30, I mean if it would have been more than 30, then usually I use a stop loss of 30. But if you can measure this region here, it's about 192, meaning it's a 19 pip move. Now a 19 pip move, let me bring up my calculator. So we found our stop loss distance is 192 points, but we take a risk to reward ratio of 3. We'll have to draw, or our take profit will be at around 57 pips. So if we can draw a box for the 57 pips, at that region there. So this would have been an ideal position this would have been how this setup would have played out. If I had taken this, if this is a trade you would have taken, this would have been our ideal setup. So if we can extend our boxes, so let us extend and see if it will have hit our TP. So from this trade you can see that we had the trade missed our take profit by a slight distance of around 2 pips, 3 pips, yeah. It missed our take profit by 3 pips only. So what do you get? So from the previous, if we can go back to the H4 and review what we had discussed. So from the H4 we discussed that we are going to take trades that the RSI is crossing below. The RSI is crossing below the 50 moving average. So in this particular trade, before you wait for the price to take you out, like this particular setup here, you can come again to you can monitor a trade at using the RSI when the price comes above the 50 moving average. You would have exited this trade. You would have exited at this point when the RSI was coming above. Yeah, at this point, this would have been the best position to exit in between these two candlesticks. Remember, each of these candlesticks represents 4 hours, so they all take 4 hours to play out. So that will be how we will have exited, although it did not hit our TP, but you can see how the strategy works. Again, let's go to this position here and see. Hopefully this one will play out. So we had finished analyzing the RSI. The RSI was crossing below, as you can see, and the moving averages were above the price. Since this candle had closed below, so the RSI was the price was below the price. So you will move to the 1 hour. You can just confirm with the 1 hour. You can see our bullish signal was given at this region here, at this candle here. So on the 30 minutes, you'll basically, so this is our position. So on the 30 minutes, you'll want to see the kind of candlesticks playing out. So one of the candlesticks you can see, it's a bearish engulfing, where you had this red candle here, where you had this bull candle, and it was completely engulfed or covered with this bear candle. So at the open of this candle here, this is where you'll have entered your market. And remember what we said, you can either target the high of this move, but if it's more than 30 pips, you can just use a 30 pip stop loss. So this is about 50 pips. So we'll go and look for where the 30 pips is. Yeah, so that's the region. So that box will represent our stop loss. This will be our stop loss, and our profit, since this is a 30 point, if you use a risk to reward of 1:3, if you use a risk to reward of 1:3, if your stop loss is 300 points and you are risking this is 1, and you want a reward of 3, you'll multiply by 3, well, get a 900 points. This means it's a 30 pip move. So we'll draw a box of 30 pips, of 90 pips, I mean 90 pips or 900 points. This should be at around this region there. Yeah, that's the, so that box, it's around 900 pips. Let's give it a different shade of color. Yeah, so this is how this trade would have played out. So you can see now this is a trade where our take profit was hit beautifully. So we entered at the open of this engulfing candle and waited for price to hit our TP at this point here. So this is how this trade would have played out. So if we can now move forward, you would have wanted to see a buying opportunity. So for you to get a buying opportunity, you'll want to go where, okay, you can use the RSI if price crosses above, but if you neglect the power of these moving averages, especially the 200 moving average, well, in most occasions you'll be getting into a weak uptrend or a weak trend. Since I told you, if the price is above this 200, that's a very strong trend to the upside, and if the price is below this 200, that's a very strong price, that's a very strong downtrend. So if you want to find a strong move to the upside, you'll wait for price to cross. If you can see at this region, the price was just ranging, so this wouldn't have been a good ideal place to enter until this zone here, where you see price found support here. So this would have been a good region to now start looking for buying opportunities. Now let's load the candlestick slowly. Now this would have been a good region to look for a buying opportunity, but the RSI has not yet crossed above. Okay, you can see at this region, at around this region here, the RSI crossed here. This is a good potential setup. If you can look keenly, the RSI was crossing above, and it's during this next move, or rather this next candle here, that closed above the 200 moving average. So what would you have done? But okay, this is not a good setup because still price is ranging. If you would have waited for the crossover like it happened here, then you would not have gotten a signal at the RSI until this later stage, but now the price was so let's look for another opportunity. Okay, there is this trade that I took a while back. If we can analyze this trade here, so what did you say? Now that the RSI, or rather the price, has crossed above the 250 EMA, so what will you want to do? You will want to drop down to the RSI and look for a region where the price is crossing above, and this would have been the best region to look for a buying opportunity, where price has just crossed above the 50 mark. So at this region here also, it's where you'd want to look for that opportunity. So as always, we'll mark this crossover with a line. Yeah, that would have been a better place to have your buying opportunity. Why? Because the price had just crossed above the 50 level. If you can look at this cross intersection, it crossed at, you got your signal at 56.69 point. So what will you do? You can move to the 1 hour and confirm our position if at all we have a trend. So if you move to your signal in the trend catcher, I also made a video of this particular indicator. This is an indicator that if a trend is to the downward, it will paint it to a color that you have customized it to paint. Like for me, if it's a downtrend, it will paint all those candlesticks black, unless when the trend was in a weak zone, was weakening, like these two regions here. So at this point here, we had a buy signal here. We had our buy signal here, and also the RSI gave us an upward move to the upside here. Don't look at the 200 moving average at the lower time frames, or this any time frame from below 4 hour. The best time frame to use this 200 is usually the daily, 4 hour, monthly, weekly. Those are the best time zones. So at this point here is when you'll want. So let's move to the Bollinger Bands. So at the Bollinger Bands, what do you see? First of all, you can see there was a break of structure this region here. A break of structure is also another confluence you can use, since the price has broken the high of the previous trend, meaning it's making a new high and possibly a new low, as you can see it around here. Again another high, but this point this price wouldn't have made. So if it came, broke this structure that was made here and gave us a new low, this one here, this would have indicated a potential trend change. And also you can see this low was on the lower band. So what will you have done? First of all, I would have waited for this break of structure. The candle should close above this break of structure, and I will enter on the open of the following structure. The low, it's about 42 pips, so we'll go for a 30 pip move, or a 30 pip stop loss distance. So my stop loss will be 30 pips. And my profit I would have targeted around 900 points. Okay, let's use this side. Yeah, 900. So this is how this trade will have played out if it was for a buy opportunity. This is how this trade will have played out. So basically that's how my strategy works. This is how I use my strategy to find my positions and my possible setups. Using the RSI, the Bollinger Bands and the trend catcher. If you can switch to the 1 hour, you can see you had an opportunity to continue riding this trend until when such a candle appears at this region here. This is when you can exit this particular trend. So this is how basically this trend works. If you can see, I had another running trade here where it's about 15 pips remaining for my take profits. If I can explain this particular region or this trade, how I got into it. As you can see below, the price came and crossed my region, my 50 level mark, and gave me a signal at 54.82. This huge bear candle here. So I marked with a vertical line. Then I moved to the 30 minutes. And what you would have seen was that previously there was this kind of move here, this kind of pattern here, where the sellers were in control. Then at the next session, the next session, the buyers came into the market and pushed the price much higher. And if you have a keen look, this was during the overlap period where we are entering the New York session. And this currency is EURUSD, meaning the US dollar was now gaining momentum before the official open of the New York session. So when the New York session opened, this kind of candlestick formation happened, or this pattern happened, a bearish engulfing. So I took my trade and entered at this. Open of this at the high of this, at the week high of this candlestick, and targeting a risk to reward of 1:3. As always, my stop loss distance is 30 pips, targeting 90. So that's how I was looking at this trade. But there is something in the market. In this market, if you can mark the highest wick of this previous candle and the lowest wick of this other candle, you can see in between here, in between this section here, the buyers were only in control, meaning at some point this price will drop to fill these orders and again move to the upside. But this is a setup for the future, so you can go and look at this setup, or if it hasn't played out. Today is on the 29th. This is a trade I took on the 29th. So yeah, you can go and look at it. then we'll make a video and see how it played out. So thank you for watching this video. Please consider subscribing to the channel for more videos, and in future videos we'll be looking for strategy for setups on the live market, on the current price movement. So thank you and have a lovely trading session.